So good afternoon, everyone. Welcome to another webinar by Accounting Yard. And this particular webinar is focused on basically helping people understand the specific nuances in certain industries, right? Because a lot of us have an understanding of operating manual accounts. But when we look at it from the perspective of certain industries, we generally will not have clear understanding about it. So what we try to do is bringing out people, experts who are in these industries to talk about it, right? Where we get the opportunity to ask them questions and seek clarity on specific areas so that they could provide their own deep understanding that will really help us. Now, for those interacting with us for the first time, right, it's typically to enjoy this webinar, one of the key things is first, try and use your name, right, so that when we call you or interact with you, we know who we're interacting with. Don't use Zoom user or iPhone 13 or something. You want to have your name so that we can interact with you clearly. As much as possible, everybody can contribute. You can contribute by either sending a message on the chat box or raising your hands, right? And there'll be times for where we can ask questions. Questions are, we have dedicated strategic places where we pause and listen to questions from people so they could ask questions, and we'll generally take our time to answer those questions. If the questions are not suitable for this particular place, we'll make reference to that and provide a point in the right direction that will help you. Yeah. Now, where are we that are organizing this particular webinar? We are Accounting Yard, right? And our goal is to become one of the practical accounting school globally, possibly impacting the lives of careers of over 2 million accountants, right? We've been in exam for roughly over 6 years plus, and we're present on almost most of the popular social media platforms like LinkedIn, Instagram, Facebook. We have a community on WhatsApp where we share content, right? We basically share content also on our YouTube channel. We do write-ups on LinkedIn, on all these various social media, just to help improve the knowledge of accountants in the field. We understand the fact that there's a huge gap between theory and practical accounting, and not a lot of us will be opportune to work in places where we have senior professionals that we can leverage on in terms of understanding. So we're creating a medium where outside of your day-to-day workplace, there's a place you can actually learn and improve yourself, as we understand that personal development is a key place in how you grow in your career. Now, we organizing trainings, right? We have the likes of IFRS in practice and practical financial statement preparation, which is taking place 1st of March, and other trainings we are organizing, right? We've organized trainings in the past, and these are plans we have for the 2025 training calendar. So in case you're interested, you can just reach out to our WhatsApp number where we can actually just point in the right direction and regards any of the trainings you're interested in. Currently, my name is Oladile. For those who are interacting with me for the first time or just hearing my name, I'm an accountant like you all, right? I have over a decade experience within the finance and accounting and audit space. I'm currently head of finance of an agri-tech business, one of the largest in Africa in terms of areas of under cultivation. I'm also a planner and an analyst, right? I build financial model, I also analyze things and all, right? People call me by different names. Some people call me AK Mr. Right, some people call me Prof, right? But that's me, right? I'll be the host, basically just trying to coordinate and manage our panelists. So the next set of faces to be seen are the panelists, right? So we have 3 panelists cutting across key industries, oil and gas, media, telecom, right? Manufacturing, services, financial sector, right? So to my far left is Taiwo Yusuf, and middle is Tosin Bewaji, and last is Tajuddin Ayala, right? They'll be our panelists. They'll basically be the ones answering key questions and giving us, sharing their wealth of knowledge, right? They're actually quite vast, and I look up to them, right? So being the opportunity of having them here is a great privilege, and we appreciate the fact that they're able to make out time from their busy schedule to join us and basically share from their wealth of experience. Based on this, I'll give them the floor so that they can basically just take their time to introduce themselves and just basically introduce themselves. So I'll start with Tajuddin Ayala. You can just briefly turn on your camera so that people can see your face, and you can briefly introduce yourself, then move on to the next person. Hello, Tajuddin. So we can't hear you. Yeah, it seems you're on mute.
Can you hear me now?
Yeah, sure, I can hear you.
Okay, good afternoon, everyone. My name is Sayinla Tajuddin. I have over 16 years experience in finance tech. I've worked across the different industry, starting from manufacturing, financial services, and also oil and gas servicing, that is a downstream. So I have experience in financial reporting, tax planning, project management, and I've also worked in with some of the project implementations like SAP, R3 S4HANA, SAP, SAP B1. So I've also worked with the implementation of some of the financial and reporting tools. So I've worked locally and internationally. So I work with Coca-Cola Electric Nigeria, which is a Nigerian bottling company, for over 9 years before moving to Eastern Europe, Bulgaria to be specific, to work with business services organizations for 2 years before coming back to Nigeria in 2018. So when I was in Nigeria in 2018, I worked with also Nigerian body company again for 1 year before moving to where I'm currently as the Chief Financial Officer of the company. So I'm very opportune to be here, and I hope you are going to enjoy sharing my experiences with you in these industries. Thank you.
All right. Thank you, Mr. Junior. We do appreciate your time, and thank you very much for joining us today. So the next person will be Tosin Bewaji. Tosin, do you mind turning your camera and just introduce yourself briefly?
Good afternoon, everyone. Please confirm if you can hear me.
Yes, we can. Yes, we can.
Okay. My name is Tristan Beraji. I have roughly a decade experience in finance, accounting, and auditing. I started as a consultant, then moved into the telecoms industry. I currently lead the financial reporting arm of a telecoms company that is listed on New York Stock Exchange. So I have experience over accounting, financial planning, technical accounting, IFRS, and market filings. So, and I'm happy to be here.
All right. Thanks a lot, Tosin. We do appreciate the fact that you're making our time to join us today. So Taiwo Yusuf, if you don't mind, you can introduce yourself.
Good afternoon, everybody. My name is Taiwo Yusuf. I'm a qualified chartered accountant. I have over 15 years experience in financial reporting, financial planning, tax management, treasury management, and corporate finance. I've worked across several industries. I started with an oil and gas, majoring in employee as recruitment with oil majors, then moved to automobile industry where I worked with one of the leading auto servicing company for over 2 years. Then later to advertising agency, one of the best, one of the largest within the Nigerian space. I spent 7 years in there. Now I'm currently with one of the leading, if not the largest, retail oil and gas retail business in Nigeria, and I sit as the financial controller of the entity. I'm glad to be here. I'm also happy to contribute and help shaping the knowledge, practical knowledge of management accounting of our accountants, the new one, the old one, and contribute towards advancement of the profession. Thank you.
All right. Thank you very much, Taiwo. We do appreciate you being here with us. So I know that to a large extent, I know the notice was quite short for a lot of you. And I do appreciate the fact that you're able to squeeze out time from your busy schedule and to make out time with us today. And I hope we're able to maximize your presence, because I know if you're going to bill us for every hour you spend here, maybe we'll be paying you for the next 10 years. But it's so given that now we're about to start, right? Yeah, so I go back to the presentation. Yeah, so at this point, I'll take a pause and just to hear from the audience if there are any specific questions you want to ask at this point in time. And if there are no questions, I can produce to the next phase. Okay. So I don't think any specific questions and I don't see any hands raised. So at this point in time, I think I can proceed to the next phase of the webinar. So I want to just basically get a ground warming, right? And this coming from what we've observed. And I'd just like our panelists to just share some things. So I want to ask a general question, and I think Tajuni, you can start. How easy is it to get good accountants in recent times, right? And give you experience in terms of maybe roles you're recruiting for to have maybe an accountant join your unit at work. How has it been for you, right? To be able to get an accountant in recent time.
Thank you, Oladele, for that question. Can you all hear me?
Yes, sure, we can hear you loud and clear.
Okay. The question you just asked a very good question, very critical question. In this sphere, it has been difficult to get a very good accountant nowadays, based on my experience and based on the skill gap that exists in Nigeria. I could remember when I started my career. I started my career with an audit firm in Kaduna, and I started with a minimum salary of like 32,500. But then the main focus for me was to learn. I mean, to learn the basic things, to understand what is happening in the business and all that to move to progress my career. Then later I joined a Nigerian bottling company, and I started as graduate training. That was in 2009. So I had to travel to all our locations to learn for 24 months before advancing to a role as a financial reporting assistant. What I wanted to say is that I was supposed to spend 24 months, but my training was cut short because of the knowledge I have. So I was reported to the head office while others were still in training. Then I won't forget one of the mentors I have, Mr. Akinwande. I went to him, I cried to him that some of our mates were still at the different locations. They were paying them out of station allowances. They were enjoying themselves. But me, I started immediately at the head office. And I could remember what he told me then. He said, you need to first learn the job. Then once you learn the job, the money will start flowing. So I listened to his advice instead of me chasing money. So I was learning the nitty-gritty of all these transactional activities from the beginning, where there was no any ERP system that integrated all the activities of the company. We had like 6 different software that we're using. We had separate one for HR, separate one for general ledger, separate one for capturing sales, which was basis. We have production reporting system. We had them like that. But I learned in the hard way. I could remember linking like 20 Excel together to produce a financial report that we submitted to our head office. So now, because of that, I've gained a lot of experience, and I've trained so many accountants as well. But nowadays, these young coming accountants or young professionals, they don't want to learn. And that is why we are having the gap. I know some of the panel members will also support me in this regard, because they want to get the quick money. They don't want to learn. And that's why we have that gap. So if you are chasing money, you might miss it because you might not have the required experience to survive in this career in the long run. But if you want to learn a lot, so you have to first ignore the fact that you need to chase money from the beginning. Just learn on the job, and then you will start earning a lot. But the other way around is what is happening now, where people wanted to get quick money, they don't want to learn. And that is why it has been difficult. In fact, you will see some people, when you get their CV, you see a lot of activities putting in there. But when you started the interview with them and you go granular, I mean, to the basic, you will discover that they don't have that basic knowledge. That's what I can say from my end. Thank you.
All right, thanks a lot, Atu. Tosin, I don't know, do you want to just shed some light just to on this particular topic? Hi, Tosin, can you hear me? Hello, Tayo.
Hi, Dele. I'm here.
Yeah, sure. Do you want to just touch on it?
Yeah, definitely. I think Tajudeen has encompasses all that we face presently in term by going historically and coming down to the present situation that we find ourselves. I think I'll just summarize what he has said in a very brief sentences. One is that the professionals, I really don't want to say young professionals now, they tend to abandon the rudiment of understanding what accounting is and before pursuing money, and that is a manifestation into what we see these days. You see a lot of certifications in CVs, but when it comes to the real work, the rudiment, you hardly see somebody that can do the job very well. And when you see such person, somebody, a fresh guy coming out of university or whichever institution is coming from, will be demanding so much in terms of pay grade. You now begin to wonder what exactly is happening within the profession. So it's a very difficult task. It's a very difficult challenges. I will only say that your platform is a good platform where people needs to key in and ensure that if they admit the rudiment, they should come back and enjoy and understand what the rudiment of accounting is and what the charter is all about when you are called a professional accountant. Thank you.
All right. Thanks a lot, Tayo. So the next one is just keeping it brief, right? So Charlie, if you don't mind, what kind of skill set do you think you look for in accountants when recruiting? So if today you're going to recruit an accountant, what are the top 5 skills you expect them to have for you to qualify them as someone that is worthy of employment in your organization?
Hello, can you hear me?
Sure, I can hear you loud and clear.
Okay, thanks for that very good questions. If I need to recruit an accountant at the moment, the skill set that the accountants must have. So the first one, I will say technical skill. Technical skill in terms of ERP system. I mean, in terms of analytical tools or in terms of reporting tools. So like any of the ERP system is fine. Excel, at least as an accountant, somebody must be able to play with Excel. I'm not saying to an advanced level. So this is one of the skill I'll be looking for. Secondly, I'll be looking for interpersonal and communicating skill, because you know, for you to prepare financial reports, for you to prepare management accounts, so you need to relate with people to get data that you need to do your work, and you must be able to communicate very well. And in terms of storytelling with the data that you've gotten from other source. So that will be the second skill set that I will be looking for. The accountant needs to have before they start working as an accountant. So also, I'll also look at the strategic thinking or the way immediately they could respond to some of the things around them. And also, I'll also look at the professional certifications, you understand. So the type of qualification they have in terms of like maybe ACCA, or if they don't have this qualification yet, so maybe they are in their career space. I think I've mentioned 4. Then also I will look at the business skills. I mean, how relevant they have to the industry they wanted to join. Because it's very difficult for you to bring in somebody that doesn't even have any experience in industry that you want them to work with. So it's going to be difficult for you, because you are going to incur additional costs to retain them, to make sure that they are up to the standard or the skill set you require them to perform the delegated task for them.
All right, that's fine. Hi, Tosin. I don't know if you want to add any points to what he has said. Okay, no problem. I think she has an issue with her audio. So we'll just move on to the next one. Okay, so I'll leave the next question to Taiwo. So if, for example, Taiwo, if you were to advise an accountant today how to build such skill sets, what would it be? So if you want to advise them how they should build their skill sets, what would that advice be?
Okay, Lele, thank you very much. I think it's a very good question. I'll also write on what Tajudeen has spoken about. For me, it's a must that you should have the technical skills to navigate your way in the accounting field. But as we all know it, the new trend, the new emerging technology has even made it so easy to collect data, analyze data, and essentially get the account ready. All you then need to do is just to do some validation, data validation, and check for variances and ensure that those numbers are okay. But the critical set skill that an accountant or an aspiring accountant or any accountant that is in the business should watch out for or try to build is start from technical ability, build your technical ability, take the necessary practical knowledge, gain it. Then the space that we think accountants should be moving towards is the presentation skill, the storytelling part of accounting, because artificial intelligence has made it easy for a lot of things to come into this space. But what differentiates accountant from the rest is your ability to tell the story behind the numbers. You have to have excellent communication skill, understand the business of building those presentation skill. Once you have technical skill, you understand how to use Excel optimally, then you can do some data visualization. Then you can also link up those numbers to business activities within your space. Then you are ready to be a good accountant at the minimum.
All right.
Thanks,
All right, thanks. I think that's fine. All right. So at this point, we'll pause. If there's anyone have any specific questions based on these 3 questions within our audience, so that they can ask at this point in time. Otherwise, we can produce to the next phase of the webinar. Okay, all right. So in the absence of no question, I think we can produce to the next phase of webinar. So now we're going into the core topic, right? Understanding industry nuances, right? And I'll start with Taiwo. In your experience, how do the core component of the management account differ across industries? Manufacturing, oil and gas, telecom, media and entertainment. Hi, Taiwo.
Can you hear me?
Yeah, sure, I can hear you.
Yeah, I said at the start, you will have to understand what management account is. Majorly, principally, management account is prepared to provide financial insights, information to management to make decisions. Is not highly regulated as you preparing your annual financial statement. Is for basically internal use. So by so doing, across all different industry, there are certain KPI that they track, which is the metrics, which make it differ from the high point of identify what, for example, if you're in a media space, you have to understand what the management is tracking. One of those is turnover. Turnover is how many campaign have you run, how many of it has turned to volume for you. So if you're in oil and gas business, we want to see volume, and we have to see the number of the number of truck that leave your terminal at a particular point in time. So then you look at the revenue recognition and cost allocation principle. It differs. If you look at a media agency, for example, you are talking about you are looking about how many campaigns, the clientele that you have, what category did they fall to? Is it a retainership? Is it a commission-based client? So that drives how you recognize your revenue. In oil and gas retail business, you have to also identify the business model. One is you can have a company-owned, company-operated forecourt whereby your revenue process will be different from when you have a dealer running the station. So these are areas that one needs to look at. Then you have the cash flow management, working capital. It different. The requirement is different. What you need to put in there is different. So in order not to take much of the time on this question, what is important is that as an accountant preparing a management account, you must understand what the strategic objective of the management is and what the competition is trying to achieve. So in a way, you must be able to tailor the structure of your account to provide such information that management will need to make an insightful decision. Thank you, David.
All right, no problem. Tajuddin, I don't know, do you want to provide some additional lights or substance to what Taiwo has mentioned?
Sure, Ladele. Taiwo Yusuf has already done justice to the question you've asked, but mine would just be like an addendum to what he has said. To me, the component of management accounts differ based on the industry. And I will summarize it only using 2 bullet points. The first one will be based on the complexity, of the industry. Take for instance, now if you look at a manufacturing company, so you have to be talking about some KPIs that relate to production, maybe capacity utilizations, efficiency of the production lines and all that. So in manufacturing industry, you look at the commercial aspect, you look at the operational aspect, which can be further divided into production aspect and warehouse, then look at the financial aspect. So the complexity of the industry drives what will be in the management account. That is the first point. The second point, like Taiwo rightly said, the goals. I mean, the amount of details the management expected will also be a key driver to the component of the management account. And I mean, some management, they don't want to see a lot of things, while some management want to see a lot of things. So this is another driver. Let me take, for instance, when you are talking about the revenue stream, you might want to see the top 10 customers in terms of performance. You might want to see the top 10 products in terms of performance. You might want to even see the product mix. And because at times, some of our accountants don't understand when we say we have a particular sales revenue and or sales volume. At times, we might have a high sales value or high sales volume. But the question at times you need to ask yourself is that, are you selling the right mix? Because at times, your revenue might be high, your volume might be high, but if you are not selling the relevant mix, you might not earn the maximum profit as expected. So these are the two major drivers I can say determines what will be in the management account.
Okay.
Thank you.
Yeah, I just to just add more context, right? Now, basically, when people talk about manual accounts, they see the income statement, the statement of financial position, the statement of cash flow, right? So that's typically what comes to mind when people think about the manual account. Now, definitely what I hear you say is that additional reports including manual account to provide the necessary insights for the business, right? And that will vary based on complexity, right?
Yes.
So now
Right.
you've given examples of data that will feed into it, right? So in your own context, if you look at it from a manufacturing sector, those data combined, what do they call such a report, right? And so when it feeds into the manual account, what exactly do they call it? And yeah, because clearly I understand that you're already talking about product mix, you're talking about capacity utilization in terms of the factory. Are there specific names they call this kind of reports when they're including manual accounts?
Okay, thank you, Oladele, for that asking that valid questions. People believe that when you mention management account, they are looking at the three statements you've mentioned, but we have others. So what I would like to share with you guys is there's a report or a template we call exposure template and exposure report. I will share the screen to see how it looks like. So exposure template shows.
You can share your screen if you want to.
Yes. Okay, let me share my screen. Just give me a second. So I'm looking for the source first so that I won't waste your time. Okay. Let me know when you can see my screen. Can you see my screen?
Yeah, sure, I can see your screen.
Okay, this is part of management account of the company. You understand? So I talk about the exposure file. What does this file shows? So it represents what we have in the statement of financial position, but in a different way. So you can see here, we have that the file was prepared in dollars. Then we have what is called local currency. That is the functional currency. The company is in Nigeria, which is Naira. Then we have all other currency. We have dollars, we have euros, we have pounds. So what this report is showing or is telling the management at a glance is for the management to see whether they have FX exposure or not. You can see here, we have our net receivable here. What it's talking about is that we are having or the company is having $32,000 to collect in hard currency. So if you come here, you see cash and security. It means out of the total cash this company is kind of like 690K, it's only 8K that is in dollars, which is 1% of the total cash and security that the company is carrying. So looking at everything here, we have $40K that we have in hard currency, where we have $1,667,000 in local currency, which is Naira. Then the total asset this company is carrying is 2,087 at this particular point in time. Then if you look at the liability side, which is the obligation, we have trade payables of 204K in dollar, while other is in Naira. We also have other payable that are not trade related here, which is 370, 370K. So if you look at the total obligation here, the total obligation here is showing 574K. Now, the company has a hard currency of 40K here. It means the exposure is red here. It means the company must source for additional $534K, to meet his or her obligation at this particular point in time. So this is part of a component of management account. This file is called exposure template, and is common to all manufacturing companies. I'm not too sure whether it's common to other areas. Maybe Taiwo can also say something about maybe if it's common to other areas like media. And in fact, oil and gas also servicing, we are using this template. So this will alert the management at any particular point in time on how much they are going to source, to offset their obligation. Thank you.
All right. Thanks for sharing. Yeah, you can stop sharing your screen. Okay. Yeah. So I think that point was well noted, right? So basically, what I get from you is basically knowing how much FX exposure the business has in terms of given how volatile FX has been, right? So you want to basically know how it's going to impact you as a business from all transactions that are denominated in this foreign currency. Yeah.
So Dele, before you proceed,
okay.
We need to establish that because management account is an international document, the structure, the mode, and what goes into management account differs industry by industry,
yep.
And it depends on the need of management. What Tajuddin has shown is basically liquidity report in our space here, where you see your receivable, practically your working capital, and ensure you have the necessary liquidity to meet the next financial obligation. So we need to put it out there so that people won't think that every other person has to prepare exposure reports.
Yeah, that's well noted, right? And that's why, if you notice, the topic is not just we're talking about, because we know that there are peculiarities of each industry, and that's what we're trying to bring into perspective, right? Because sometimes that peculiarity of each sector is missing in knowledge of different people, so that when they're thinking about certain sectors, they're already thinking about certain things that may come out that may be unique or can be tailored in another sector based on what they've seen in that sector. But thanks for pointing that out. Yeah. All right, so I'll go to the next one.
So before you go, hi Ola.
Okay, hi Tosin.
Apologies, I haven't spoken. My internet has been misbehaving since the beginning of this call. So before you go, I know we've been talking about revenue, cost, and other accounting terms. I think it's also very important in terms of macros against management accounts as well. Macros being FX, interest, inflation rates, all those things also helps the business in drawing up better plans in terms of, for example, using FX as an example, if the business is monitoring the macros of a certain environment, they'll be able to determine whether they still need to carry out FX transactions at the level in which they are carrying out those transactions. So not just about settling the obligation that's arising from those transactions. But the question should be, should we even continue with this kind of transactions with the current macros in that environment in which the company is operating? So being able to track, monitor, and most likely forecast where the macros will land in the nearest future would also help any organizations prepare better management reports.
Yeah, I agree with you. I agree with you, right? We've seen an impact in terms of how macros have basically impacted various industries, right? And in 2024, one of the most common thing amongst most companies was FX loss, right? And that was just basically by the devaluation of the naira. Even last year, at the beginning of last year, we saw most call it interest rates at I think just the high ends of 20s. Like when I say high end of the 17, 18, 19, 20 at the beginning of the year. And we closed the year with when we started seeing interest rates running between 32 to 40%, right? So properly tracking that and monitoring that and including such reports in terms of the potential impact in your management account will be quite insightful to management based on the peculiarity of the business you're into. So if you're a business that has a lot of FX transaction, definitely any impact of devaluation of naira has a huge impact in terms of the performance of the business. It's a business that has high borrowings, right? When there's a fluctuation in rate, depending on the kind of contract you've entered with the bank, that definitely has a huge impact in terms of your finance costs in your books, right? So I definitely agree with you that tracking those macros will definitely give proper insight to management. And based on the peculiarity of the industry you are in, you know the kind of macros that would be very important to properly track in your books. But thanks, Tosin, for adding that. So yeah, we're talking about specific examples. Okay, could you please share specific examples where manual account has helped solve an industry-specific challenge? Tosin, I don't know if you want to start with this.
So I think I would start with, so because what management account does is basically analyzes and reviews how the business has performed against the KPIs that were set maybe at the beginning of the year or at different reporting periods. So because that comparison is always something that the business is preparing and looking at, it can help them implement strategies in that would help the business recover from. Let me use an example. Last year, January, there was a steep devaluation in the naira. I think it went from 900 to 1,000 and something, if I remember correctly. And most of organizations that had significant FX transactions, they were impacted. They had a lot of FX losses on their quarterly reports. Most organizations, especially in telcos, if you had a huge FX loss. Even what's it called, Nestle, if you look at their report, they had huge FX loss. So most of them were now thinking of, okay, so how do we mitigate this? The only way they can properly track the impact and the future impacts of whatever solutions they are going to implement will be through the management reports, because management reports doesn't only cover transactions that has happened in the past or events that has happened in the past. It also covers the likelihood of events or transactions that will happen in the nearest future. So I believe that depending on your industry and how experienced or how qualified the people that handle your management accounts are, they can help organizations recover from unforeseen events in the economy. Using telecoms as an example, most of the FX transactions that most telecoms industry were suffering from was either as a result of dollarized pricing in their contracts or as a result of diesel power generation, like diesel imports. Those are the things that are most likely giving rise to FX losses. But by the time you see that impact in your books and you're now considering, okay, should we source locally? You can, or the only way you can recognize the impact of alternative solutions to those problems is through the management account, because what the management account will do is, okay, under scenario one, if I source locally, what will be my impact on my bottom line? If I continue with my FX transactions, what will be my impact? So that can only be done correctly if you use your management accounts as good as possible, instead of, because normal statutory reports is just historical and that's the end. But management accounts can give you foresight and also help you determine strategies to help the business survive in a tough environment like Nigeria.
All right. Thanks for that. Taiwo, I don't know if you have any specific examples where management accounts help solve certain specific industry-specific challenges.
Yeah, when I was in the media industry, one of those important factor that you need to consider in terms of the usage and beauty of management account is future looking, is forward looking in a way. I remember at a point, I think it was at year end, where we are trying to do our historical numbers. And we discovered that one of our major clients is going to leave us due to international alignment. Dele, you can relate to this perfectly. So what that means is that after preparing the historical account, we then move towards management account, where we did a whole lot of scenarios. And one of those we did was to look at our client base and see the impact of losing such clients. So because media advertising, agency part of it, deeply depend on contract. So that client that was leaving was constituted about 30 to 40% of our revenue. So what it shows us by running those analyses were that we cannot run the business the way we ran the outgoing year. So it gave management insight into what first line of defense will be in terms of what cost to bring and how to optimize the cost element. And also, it also opened the management insight into how to more or less like look at other stream of revenue rather than going for the big businesses that can only guarantee a retainer. Why not go for a commission-based business? And that help us in a way to mitigate what could have been a very bad year at that time. Thank you.
All right, thanks, Tayo, for that. So we'll go to the next questions. Right, adopting manual accounts to industry needs. And I'll pose the question to Tajuddin. What are the unique financial and operational factors that must be considered when tailoring manual account for industries such as oil and gas, media, and entertainment? And that we can touch on once Tajuddin is done. Hi, Tajuddin.
Hello, can you hear me, Oladile?
Yeah, sure, I can hear you now. I can hear you.
Okay, thanks for that question. I would like to speak about manufacturing settings. Looking at the financial and operational factor that must be considered, I mean, tailoring the management account preparation. Like I've said initially, in manufacturing settings, so we have some operational activities that we look at or that are peculiar to manufacturing sector. Here, part of what we look at is cost optimization strategy, because we focus on cost control and on the breakdown of cost of productions in terms of the raw material, direct expenses, and overhead. And also, as part of the operational activities, we look at the plant utilization factor. I could remember a company that was utilizing its capacity up to like 20% out of the 100%. It was through the management account that the company discovered this based on the operating activities. And what was done actually was to look for other alternative of the usage of the remaining capacity in terms of 80%. And some of the options the company consider, one of them is that should we diversify into another product portfolio, or should we do there's what we call there's a terminology we use, but once I remember, I will let you guys know. Also, we have the efficiency of production lines. We also measure that. And also, as part of the operational activities in manufacturing company, we look at the supply chain optimization. I could remember when I was with Coca-Cola Hellenic Bottling Company, and then we had like 13 plants across Nigeria. But because of the supply chain network and optimization project, the number of plants were reduced to 8. We had to close down like 5 plants. I remember we closed down Jos, Ilorin plant, Kaduna plant, and all that. I've forgotten the remaining 2 plants that we. So these are coming from the operational activities of the business. So also, it also helps in terms of whether you need to invest in production lines. That will be financial, and also other aspects of financial that can affect the operation of the business. I've talked about initially. I mentioned about what we are pursuing in terms of the revenue stream, in terms of the value, in terms of what profit contribution standard we are looking for, what are the profit contribution actually we are looking for. So what is the overhead percentage of our turnover? What is our EBIT? What is our EBITDA? Also, these all financial metrics also inculcate into what we embedded into management account, which also assist the management in making strategic decision about the business, in addition to the operational activity in terms of the manufacturing efficiency, cost optimization, in terms of the downtime that might happen during the production process, the maintenance of the production lines and all that.
All right. Thanks, Tajid. Taiwo, do you want to point out? But just to mention something, right? Now, there's a strong correlation between specific lines, for example, in the statement of financial position or in the income statement, especially revenue and cost of sales, right? And how they tie to operational factors and financial related stuff. Now, it would be nice that in providing the context and example, we can point to, in certain industries, those lines within the financials and the kind of operational factors that are tied to them. So that way people can understand clearly some of these things and can relate with it better. That we can continue.
Okay. I think Tajo has touched on so many factors, but let me restrict myself to revenue in oil and gas retail business. One of the major factors we look at is our supply chain. As you are all aware, PMS has been a major factor that drive virtually all business activities within Nigeria in terms of high cost, low cost variables. So, and over time, supply chain has been a major headache for us that plays in that space. what factor we consider is we have to look at our install capacity. We have a terminal, we have forecourt across the federation, and one of the factors that management account does for the management is it helps to provide insight as to utilization of those assets. Let me take a typical example. Majority of PMS is sourced locally from NMPC until Dangote came on board. So you have an install capacity that can handle you truck out trailers of PMS, say 60 to 70 on a daily basis. And that goes in, if you are successful, it goes into your revenue stream as revenue. But unfortunately, because of challenge of supplies, you didn't get the necessary quota that you could get from NMPC. That impacts your revenue. And because our industry is a capital intensive industry, you have installed capacity of say 50 million liters of petroleum product. You can only manage 10. So what that does is that it is going to the utilization efficiency of the utilization will drop, and that the depreciation cost for those installed capacity will not be covered by the contribution you are looking at. So it is one of those areas we consider. We tend to look at what is the contribution per volume, what is the contribution by the truck that we're able to move to the final consumer, yourself, myself, buying at the forecourt. So in a way, it affects our revenue. So management is constantly looking at that in trying to look at the line of how our management account will be structured so that such information can be provided and readily available. So if we have to discuss on every element, every line item, and okay, let me also add this. Then oil and gas business is highly regulated industry. Any infraction whatsoever is a large sum, a large penalty and fine. And if those data points are not tracked correctly, you may end up having your terminal or stations being locked up, meaning that there won't be any revenue, and that will impact the bottom line. I hope that answers your question.
Yeah, thanks, Tyle. It's good you're pointing. Yeah, you mentioned some of these key points, right? Thanks for sharing that. Okay, so I'll point this direction in the direction of Tosin. How does strategic focus, e.g., cost control in manufacturing or revenue optimization, impact the structure and focus of the management account? Tosin? While we wait for Tosin, I think Tajini, you can answer the question of cost control as relates to manufacturing. I know you give an example of how you shut down plants just trying to optimize costs because supply chain consideration. I think that's a good example to still re-emphasize at this point in time. Hi, Tajini. Oh, okay. All right, so let me try and unmute to see. Yeah, you can try now to see a bit on me to say.
Okay, all right. Please confirm if you can hear me.
Yeah, sure, I can hear you. Okay,
so for the telecoms industry is a customer-driven industry. It's customer-centric, it's customer-focused. And the telecoms industry is also a regulated industry, meaning that the MNOs or all the telecoms operators cannot just increase their prices as they would like. This is strictly regulated by the NCC. So in terms of the management account now, so putting all this into perspective, is customer focused, is regulated, there's a bit of restriction on pricing. So it means that it puts a lot of pressure on the business to kind of implement specific strategies that would also not only be profitable for the business, also will not also be flooding any regulatory or get any regulatory publications or get into troubles with the regulators. So for telecoms industry, one of the major things that is key that well, I would say is a key focus when talking about management accounting will be in terms of their revenue optimization, and it's different from different industries. For the telecoms industry, what revenue optimization looks like is customer retention, customer churn rates, increased market share, providing innovation, providing new technology. So all those things are what management the organization focuses on in terms of preparing management accounts. Churn rates, customer churn rates means that how many people are dropping your the services you are rendering and going to other players in the industry, or how many people are taking up new services that you're offering. So all those things puts into perspective to track how the business is performing. And when it comes to innovation technology, it means that for example, 5G came to Nigeria like a couple of years ago. So who were the first mobile operators to provide the 5G services to Nigerians? Which of the Nigerian region um, would demand 5G than the other regions? Those are the things that are included in the management accounts, and also helps the business to kind of focus. For example, now if you're in the West, in Lagos, there's a huge demand for data. The demand for data in the West is different, is different from what the demand for data would look like in the North. So, and this means that the kind of investments or the kind of structure that the telecoms operators will put in the West will be different from what would be in the North. Because if you put the same kind of infrastructure in the North as well, the business is not going to be as profitable, because you're not going to be generating as much income as you should. So even in a country like Nigeria, there still has the management report still has to be segmented in a way that you can do profitability per region, per customer, and be able to track how much you are incurring, how much you are generating to cover your business, and how much you are making at the end of the day.
All right, thanks. So one thing I can hear you say is that there's a lot of focus on things that are directly related to your revenue generation, right? Metrics tied to customers, number of customers, profitability of customers, how they're distributed across regions, the assets that are used to generate this kind of income, right? So that means basically, because of how the telecom is very capital intensive in terms of the investment in assets, there's a lot of attention being played to those investment assets and how they're able to help you generate income, right? Just in a summary of what you just said.
Yeah, correct.
All right. I don't know if you can hear us now. I know last time we couldn't hear you.
Yeah. Sorry. Hello, Oladile.
Yeah, we can hear you.
Can you hear me?
Yeah, we can hear you loud and clear. Yeah. So just want to hear you from the same question. How does strategy focus, e.g., cost control in manufacturing, impact the structure focus of the manual account?
Okay, Oladile, thanks. Like I had mentioned earlier on, in manufacturing company, the primary focus would be the cost optimization, that this minimize the production cost and optimize, of course, resource usage and improve operational efficiency. How would this impact on management accounts? And we have detailed cost analysis analyzing the cost of production into direct and indirect elements, and into tracking of the raw material, labor, and overhead cost at a granular level. So if you look at this, you discover that there is one element in manufacturing sector, and what I would call overhead. We all believe that you can spread your cost if you are, producing up to the level of capacity you are supposed to produce. I mean, when your production is very high, there's high tendency that your unit cost of overhead will reduce. You understand? Also, variance analysis also, by comparing the actual with the expected or the plan or the budgeted, so you're able to toll out where is the inefficiency coming from. Is it coming from the raw material usage, or is it coming from the way the employee are working? Is it coming from the fixed overhead that has been budgeted for, which should not be affected by the level of the capacity? So also we have efficiency metrics, report on production line efficiency. Production line efficiency, the capacity utilization, when you are comparing the actual output versus the potential output. And in fact, there is a formula where you can calculate the capacity utilization rate, which is equal to the actual output divided by the potential output multiplied by 100. So we also look at the wastages also during the production process. How are we be able to manage our raw material in the production process? So we call it material losses, which can come as a result of using more than what we should have used in the production process. And even though we may have a loss factor already embedded in the production process, so the output or the usage might be more or less in terms of the losses that we incur during the production process. Also, we have capital expenditure tracking, which is also part, because we have a heavy cost in incurring production plant and machinery that we use to produce our product here. So monitoring ROI on investment in machinery and production technology is also one of the tracker that enhance the quality of management account in manufacturing company. Also, part of what is so important in manufacturing sector is the inventory. We always talk about cash as we always say cash is a king, but also inventory also in manufacturing company is also a very important item that you must not neglect if you need to survive. And that's why in management account we put some of the metrics that compare what the inventory level that we are carrying. Apart from reporting the inventory level that we are carrying, we also try to divide them into various categories. Is it raw material? How much raw material we have in our finished goods? Is it finished good that we have? Are we keeping the right finished goods at the right time? Because there's a concept in manufacturing company that we call make to order. So manufacturing companies are not producing down now because of the cost of the cost element, and also cost to be incurred in warehouse. So they produce based on customer request. We call it make to order. So if a company is doing make to order, that means they only produce based on the customer request, and this will also have impact on their plant or capacity utilization. Thank you. I don't know if I've spoken to.
Yeah, you spoken well. Yeah. So yeah, so just taking a pause here. For those who are interested in learning the professional manual account, there's a link which I was also share in the chat box, right? Where you could actually just purchase a course that can actually teach you around the professional manual account. Yeah, this is just while we All right, so that's it. I just want to mention that. Yeah. So moving on. All right. So moving on to the next phase. So next phase is, at this point we just pause. Participants, I guess they have questions. So if you have any specific question, you can just indicate by raise of your hand at this point, and we can unmute you to ask your questions. And we can also go through the chat box to see specific questions that have been asked so far. So I think that someone has asked for the foreign exchange exposure file. If there's an Excel version that we could have, we can discuss that after. A template that can be created and just to share with them. So regarding capacity utilization assessment, what is the fundamental things to look out for? I think Tajuddin, do you want to answer that question?
Yes, of course. I talk about the plant utilization capacity report. So what you need to look out for, there are basically like 6 items here. You need to look at the actual output. I've said about it, I've talked about it earlier. Actual output versus potential output. So if what you can produce is more than what you are actually producing or where you can get to, that means there's a problem. That means you are producing below the capacity level. So let me explain the capacity level or capacity utilization before I even make mention of how you can track this. In a manufacturing company, if on an annual basis, maybe we want to produce, we can say, okay, for this year, based on sales forecast from the commercial side, because it will be from the top to bottom, then we realize that we need to produce like 100,000 units of a product. So 100,000 units of a product, then we have to look at what is our existing capacity, the machinery or the plant that we have. Can that plant produce up to 100 level capacity? 1,000. So if it is, so we say, okay, what we can produce is 100,000, which is the maximum capacity level. Now, if you are producing anything below, that means you are not fully utilizing your existing capacity, because what you can produce is up to 100,000. Maybe you are producing around 10,000, around 20,000. That means you are not producing up to the level of capacity that you're supposed to be producing. So we can say there that your level of capacity is below the expected. And you can actually check that by comparing the actual output with the potential output. Then I've mentioned one formula that you can use to check, which is capacity utilization rate. You can say actual output divided by potential output multiplied by 100%. That's one area that you can look at. Then, secondly, you also need to look at the production efficiency. So how efficiently are you utilizing your production capacity? Is your line running efficiently? When we say line is running efficiently, it has nothing to do with the volume that you are producing. So are you utilizing all the elements, the raw material, are you utilizing them in an efficient way? So if you have to consume 30,000 kg of raw material, are you actually consuming 30 kg of raw material, or you are consuming more? So that is how to test whether you are efficiently producing or not. So also you need to look at the resources constraint or bottleneck. That is, when you want to produce, you need raw material to produce. You need all other factors, the labor to produce. So are you having the enough machine hours or the raw material available to produce the expected output? So if you don't have that, we call that bottleneck. That will prevent you from achieving the maximum capacity that you should have produced, which I mentioned initially as 100,000. So also need to look at the downtime and the maintenance. For us that we are in manufacturing sector, we don't run our machinery throughout the year without maintaining them. So we have what is called major overhaul of the production equipment, or is it normal or routine maintenance? In some companies, manufacturing companies, they develop a culture of maintaining their machine maybe every three months. It can't be on a monthly basis. It has to be maybe quarterly basis, because if you don't maintain your machine on a quarterly basis and you have to wait the end of the year to maintain the machine might short, you might have technical issue with the machine, and this will prevent you from achieving your plant utilization capacity. So also we look at labor productivity. So are you using your people efficiently in an effective manner, or maybe they are supposed to spend 8 hours on the line, so they are spending 4 hours on the line and they are using the remaining 4 hours for side talks and all that. So you have to also check your labor efficiency. Also, you can also use a cost to determine whether you are actually utilizing your capacity in an efficient way or not. Like I've said, there's one element of cost that is very key that you can't ignore in manufacturing company. So this is overhead. So the implication is that when you produce more, so your unit cost of fixed overhead will reduce, and you can use this to your own advantage because your cost of production will be reduced, and at the same time you can compete with other manufacturing companies in the industry by setting your price, because one of the factors that affect the pricing is cost of production. If cost of production is very high, so there's a limit to the percentage you can put on that cost to determine your selling price, because you also have other competitors playing in that very particular industry. Unless you are the only one in a monopolistic situation, that's where you can set a price anyhow. But if you are not in a monopolistic situation, that means your pricing must be right for you not to lose customers. I think I've mentioned up to 6.
Yeah, I think that's fine, right? That's fine. So I think that's fine. I guess we can just answer questions from the chat box. Yeah, thanks a lot, Arjun, for that. Muhyiddin, you can kindly unmute yourself. Hi, Muhyiddin.
Yes, thank you very much. Good evening, everybody. Good evening, our panelists.
You can go ahead. You can't hear you again.
Hello?
Yeah, you can go ahead.
Okay. I have 2 questions. One of them is on working capital. So I don't know. Can we use like an LC to fund a working capital? When I say LC, I mean what was it called? Like a loan from a bank for use for foreign transaction.
Okay.
For export.
Yeah. So short answer is yes, right? I'm not saying I need to justify that there's a need for that funding, right? However, due to the peculiarity of what we are discussing now, I'll say we cannot go into details of that question, right? Because the question, what we're focused on is things that are tied to industry-specific things that cover creation of manual accounts, right? If there's a training around maybe financing, we could go into more details as regards it. Yeah, hope that answers the question.
Okay.
All right.
Yeah, the second one is on FX losses. I want to ask, how do we treat FX losses when we prepare management accounts?
Okay. So I'll just chat us, right? There was a write-up on Friday by Accounting Yard that talked about treatment of exchange differences and the category and the accounting entries, right? The accounting has support to chat you and just share the link. So you can just read up exactly how you treat FX losses. Yeah.
Okay, thank you.
All right, welcome. Abubakar.
Yeah, hello.
Yeah, sure, I can hear you.
Yeah, good evening. Thank you, Accounting Yard, for this wonderful webinar, and thanks to all our panelists as well. So, please, my question is on the three components of financial statements in management accounts. So, like income statements, financial position, and the cash flow. So, like for example, let's assume that you're preparing and you have issues with maybe the financial position, maybe it doesn't balance. What are the things you have to look into, to maybe a kind of check to ensure that what you're doing is right or not?
Okay. So I'll try to answer that question for you, right? There's no one answer that can solve your problem, because the reason why you may have an issue in terms of taking your financial position, I guess what you are referring to is that maybe, for example, your total asset is not the same thing as equity plus liability, right? That's what you mean.
Exactly.
Now, there are so many reasons that could cause that, right? One is, first, is your trial balance fine? Yeah, if your trial balance is fine, then generally you should not have an issue. Yeah. The second piece is typically what I've noticed is your movement in retained earnings, right? So if you add your opening retained earnings plus your profit or loss for the year, should equal your closing retained earnings. Is that the case? Right? You want to check that. The other pieces are typically maybe signs within your operational manual account. So maybe where I meant to put a negative sign, you put a positive sign that could cause a problem. Right. But typically it's not easy to just tell you this is what the problem is. One would have to walk you through different possible scenarios that can now tailor it down to where it is. What I typically do is pick the trial balance, map, and try looking at it from the trial balance. What's my total assets based on my trial balance? What am I seeing on my statement of financial position? What my total liability? What's it on my statement of financial position? That way I can narrow down potentially where the problem is coming from. Then when I narrow it down to where it is, then I can now drill down further, right? But I'll just suggest that you can just go through if you go to accounting YouTube channel, there is a 3 series video on operational manual account that is free. And there's a paid version of which you shared in the group, which you can also go through. But yeah, but that's just majorly it. Yeah.
Thank you so much.
All right, no problem. In the absence of no question at this point, or we have answered all the questions, I think we'll move on to the next part. So now there are a lot of reports, information we've talked about. So it's one thing to say this report. It's another thing to say, how do you even gather the data and how do you go about the reporting, right? And I'll pose this question to Taiwo, right? So what are the biggest challenges in collecting and presenting financial data specific to industries like services, telecom, media, and how do you address them?
Yeah. Yeah. This, as rightly said, this is absolutely a very big challenge when you deal with management accounting or you are doing statutory reporting. There are certain situations where value can be lost, or probably you don't capture the necessary value because of missing data or not capturing information the right way. The business will be telling you, we have made so, particularly from the salespeople, we have done this, we have done that, but the information before you is not speaking to that. So one of those things that you need to do is, first and foremost, is to have what they call data governance framework. What that means is that there's a set of rules that needs to be agreed and prepared by the organization where you are working, where who is responsible for data and how data responsibility will be shared across the entity. I'll give you an example. For example, if you have where I work, you have a value chain that is very, very long. Imagine you getting petroleum product from NMPC, then you want to track the revenue from that point up to when you get to your forecourt, petroleum station is what we call forecourt. So that when you sell to the final consumer, it has to touch a lot of data points. And if any of it is mixed or probably it doesn't carry forward, then there are instances that you would not have enough data. So first and foremost, what you then need to do after you have established your framework is to also have data validation policies, probably or rules in your own data collection system. What I mean by that is that you must be able to reasonably ascertain that, oh, if we have brought, say, 20 million liters of PMS and the inventory value is saying you have 5 million outstanding, so there's only one thing that could happen. The 15 million must be reported as revenue. If it's not reported as revenue, what part of it does it belongs to goods in transit that has not even been fully recognized as revenue? That's one of those area to look at. Then secondly is you have to train all the employee within the organization to ensure that they are aware of how to treat data, how to manage data in such a way that data integrity is maintained at all times when it moves from one department to the other. And also, what we also do is that standardization of our templates, of our reporting template, of our data collection template across all value chain help us to ensure that information are captured rightly and integrity of information is well protected. In so doing, if you encourage collaboration among all the departments, you will be able to arrest issue of data inefficiency or missing of data. So what that means is that if people speak to each other, for example, you have a supply chain department that bring products in, the sales department collaborate effectively with them, they'll be able to manage revenue, for instance, to know that, oh, this is what we have sold, this is what is outstanding. Your inventory department is able to speak to the sales department rightly and say, oh, guys, this is what my number is saying. What is your number saying? That in a way will go a long way to ensure the data is complete and is free from all material error. Then the third part is fine, you can have all those framework, you can have all those collaboration. The threat of cybersecurity is a very strong one, particularly organization that is fully automated. Any instances of breach can corrupt your data and make it ineffective. So you have to ensure that mechanisms are put in place, the right security architecture is built over your data, firewalls and all the rest are done to ensure data is well managed. So once you have certainty on the reliability of your data, then you can then prepare your financial statement, or sorry, your management account in such a way that it will give management can rely on it, knowing fully well that all areas of inefficiency has been dealt with, has been managed. I think that's what we'll do in where I work and where I've worked in the past.
All right, thanks. Tosin, do you want to just say one or two to add to what Taiwo said as regards to data and reporting?
I think so. I think I would just add one thing. So depending on how big the organization is, there's a likelihood that there are going to be different systems in place for different purposes. For example, if you work in a telecoms and IT organization, the operations guys, the engineers, they most likely have a tool that tracks the site, whether the site is on air or off air, and those information are real time. So they have a system in place there. Finance people have a system in place that does all the invoicing, PO, payments, and all that in place. that does the payroll and all that. Management accountants, ability to be all this data from different data points and make meaningful sense of it is very important. Mention a lot about numbers, but in management account, there are also the non-financials, which is how many people, how many customers have you retained, or how many customers have left you and are patronizing the other person. Reopen. How many staffs do you have now? How many staff did you let go? So all those non-financials are also a key part of the management accounts, and being able to merge them together and make it meaningful to the owners of the business is also something that is very key. And that can be done in different ways. You can do that either through developing templates like the panelists just finished explaining, or you can do that through having finance business partners or business partners to other the is communicated effectively to them. So there are different scenarios, but it's very important to be able to bring all those data together as one. Hello, can you still hear me?
Yeah, Tosin, thanks for sharing that. Thanks for sharing. All right, I think I'll move on to the next slide. So the next question is, which I'll pose to Tajudeen. How do you ensure the data reliability in industries with complex operation, such as oil and gas and manufacturing?
Hello, Oladile, can you hear me?
Yeah, sure, I can.
Okay, data reliability is one of the key factors that you need to consider in preparing management account. Because if you prepare management account, you have to, when you are preparing management account, you have to look for data. So basically, data could come in two forms. Either you are generating it directly from the system, or you are also contacting your colleagues and getting some of this data needed. Now, people might not want to agree, but I will say there is no any ERP system that you implement that will give you everything that you want. In fact, I had that one CFO in the past where she want us to even text what the system was giving us then. We'll look at, okay, what system is giving us. So she wanted us to walk back to see whether what the system was giving us then was okay or not. So what I'm saying in essence is that data reliability is very key when you are preparing management accounts, because that's what people are going to use to make decision. So the first point is that you have to look at the robust data collection process, how you get the data. There are some that come from, for instance, production line. You can get some data from production line in terms of the output, the rejection rate, through the production process. So your data collection process must be robust for you to be able to get what you need also. So implementation of the ERP systems. So ERP system is one of the a tool that you can use, to source for your data. In fact, my thesis is actually on the ERP system, on the accuracy of the impact of the ERP system on the accuracy of financial reporting. ERP is very key here. When we say ERP system, we mean enterprise resource planning system. And this system is more than a common system, because some company uses individual system. But when we say ERP system, we have the integration of all modules in one system, and data can flow in. You can get sales related data in the same system. You can get controlling data, finance data, customer relation relationship management, supply relationship management in the same ERP system. So like example, SAP. SAP is a very good ERP system where you can get your data from different aspects of the sales data to an S&D module, financial data to controlling and profitability, customer data to customer relationship management. So you must have a very good ERP system for you to get reliable data in preparing your management account. So also to ensure data reliability, you have to do regular data audit and validations. You understand? So you check the accuracy of data that you've gathered. And in addition to that, you can also use reconciliation process to check whether what you've gotten is accurate or not. For instance, there's a report called SAP B1. There's a report called inventory audit report, so which is flowing directly from inventory module. So when you are preparing management account regarding inventory, so you are using trial balance, you are using general ledger. So what we do here is to compare the two reports to make sure that there is no problem. So whatever I'm having as the breakdown of my inventory per line item must agree with what I have in my general ledger to be sure that the data is accurate. Also, for fixed asset related area, you can use your fixed asset ledger. You compare it with the SAP, the fixed asset module, where the figures are integrated. So through reconciliation, data validation, you can actually check the reliability of your data. And also you can look at the standardized data governance framework. I mean, there should be a way or a clear guideline for that data handling, storage, and usage. So you must have a guideline in your company that specifies how you handle data, how you store data, and how you use the data. And that's why we have experts. There's no any business that has a very good ERP set that there's not going to be a consultant internally. And there's what we call data warehouse and data intelligence, where you can actually get or source your data from. Then I will steal one point from one of the presenter, Taiwo Yusuf, about training and awareness. So you need to create awareness about the importance of the data you are getting for the accuracy of your management account and for people to depend on that report. You need to create awareness how important the data collection process is. Also, the training of employee, which Taiwo has already mentioned before, also plays a very good part in data reliability. Thank you.
All right. Thanks a lot, Tajudeen. Thanks for that. All right. So I think this we've kind of answered, right? In terms of KPIs that KPIs we need to track across various sectors, right? So I'll just leave Taiwo to just add and summarize any key points you want to add, and otherwise you can just move on to the next point. Taiwo?
Yeah. Thank you, Dele. Well, as we have rightly stated right from the start of the conversation, key performance indicator is a very localized measure when it comes to management account because of industry specifics. What you track in media is different from what you track in oil and gas. So I think my take here will be that wherever you find yourself as a management accountant or accountant that doubles at management accountant, you should understand the business and you should be able to align the strategic objective of the management to what you are presenting to them as management account information, so that when they are making decisions, they have information available to drive such decision. Thank you.
All right. Thank you very much. Thank you very much. Okay, and I'll pose it to Tosin. Can you share an example where tracking a particular KPI provided an early warning or a breakthrough insight?
Okay. So I would okay, so I will start from a prior question, then go into this. So in terms of KPIs, when you're the important thing about management accounts against KPIs is to be able to measure how a business is performing. That's basically the summary. Trying to measure, okay, how is business performing against the standards we set at the beginning of the year or at the beginning of any reporting period. Now, in terms of KPIs are different for different industries, and sometimes, especially in this climate that we are in, sometimes it might be difficult to get data to actually test how the business is performing globally, not necessarily in Nigeria, because your numbers might be looking good, but by the time you look at it, you compare that business to a similar business in another part of the world or a similar part of the world, you find out that, okay, we are not as good as we think we are. So I think that's the beauty of management accounting as well. So, and I think one thing I feel is important is that as your business, you should also how your business is performing against your industry leader. The industry leader might not be in your country, it might be in another country, but industry leader, how are they performing? Is your business model different from what they are doing, or is there something they are currently doing that you are not doing that could improve? For example, in telecoms now, one of the major KPIs that we track is adjusted EBITDA, and that's because, as we mentioned earlier, business. So for a capex intensive business, it means that you are investing heavily on capex. And for you to invest heavily on capex means that you have to do some form of financing, because you cannot take all the money you're generating from your operations and put into capex. You're just going to be tying your money down, and you're not going to be able to meet your short-term financial obligations. So for capex intensive industry like telecoms, most times what they track is adjusted EBITDA, ALFCF, AFO. Those are the things that they look at. Now, and I'll give an example at where I currently work. Like I said, it's a capex intensive business. So it means that you have to do some form of financing, and it means that you have to do heavy imports sometimes, because the equipment you're going to be needing is not manufactured in Nigeria. So sometimes you have to bring in those equipment into the country, even something as little as the country at a point. So I will give as at sometime last year when the fuel price increased, FX increased, and then we were seeing that we were getting, as to kind of meet our USD obligation, we did some hedging there, we did some LCs, we did some NDFs, we did some swap deals with the banks, and then we realized that okay, the FX losses that we're getting from this transaction, by the time you add that to the cost of the item and the interest you're paying on some of these LCs, at the end of the day, the cost you think you are saving by importing the diesel and the cost you think you're saving by importing a diesel and sourcing for the diesel locally is you're not saving as much as you think you are. So I think that was one of the key things that management accounting did for us. We're able to pinpoint that okay, there's FX from the FX we were generating was significant, and then that was when the business switched strategies to say okay. And then I think the government wanted to impose a levy or so on diesel imports as well. So that's all those warnings gave us the opportunity to be able to change a strategy and say, okay, instead of fully importing, how about we start sourcing locally from different vendors so that the business operations would not slow down. So I think that's one of the key examples I would give.
Okay. All right. Thanks, Tosin, for that. So we'll take a pause here and see if you have questions from people, and so that we could answer any potential questions that are coming from the chat box. So yeah. So I don't think there are any questions. If there's anyone that has any question, they can raise their hand at this moment, so we can unmute them, so they can ask any specific questions that comes to mind. Okay. All right. So in the absence of no question, I think we can just move on to the next section. Right. And this one is leverage technology for industry challenges, right? I know we've talked about this a little bit, so that we don't go into too much detail in this point, because I know we talked extensively about ERPs. I just like Taiwo to just quickly summarize or any key additional points he wants to mention in terms of leveraging technology. How has ERP systems or other technologies been used to optimize manual account preparation in industries with intricacies around supply chain, such as manufacturing or oil and gas?
Yeah. Yes. I think we've discussed extensively on this, but what I'll just add is that as much as it's important that we have an automated system, one of the pitfall of ERP is happens during implementation. So if you are working in an organization that needs to implement ERP, you should be part and parcel of the implementation stages, because if you leave it to the IT people, they will configure what they think is right, and that might not mirror what the business is all about in terms of the value creation for the business and other activities of the business. So that is very key. When it comes to supply chain, it's also important, as I mentioned earlier, that every expert within every function within a business should be part and parcel of the implementation of ERP. And as Tajuddin rightly said, from ERP, because it's a very complex system that ties a lot of functions together. One way or the other, if one or two steps is missed, it could affect the quality of management account. No doubt, an automated system like ERP would speed up the preparation of management accounts, but at the same time, the reliability of such data coming out of it is very important. That is why it's very key that practitioners, accountants, and the likes must be part and parcel of the implementation.
All right, thanks, Tayo, for that. So I'll pose this question to Tosin. So what technology or tools are proving to be the most transformative for industries like media, entertainment, and telecom, and why? Hi, Tosin.
Hi. Okay. Okay. So I will speak on mentioned earlier that some industries have a couple of systems in place for different use. For example, I mentioned the operation one, where we have different.
Hi, Tosin. Your voice sounds faint. It sounds like you're far away from the mic.
Hello, can you hear me now?
Yes, better now. Yes, continue.
Okay. All right. Yes, I was saying that there are different parts of the business that uses different functions. And I think one thing that's helped with where I currently work is that we have an ERP that that can be integrated with most of the other systems that we use. And aside that, we also we make use of Power BI as well. And the reason why I'm mentioning Power BI is because we have for telecoms industry deal with huge amounts of data, and being analyzing those data sometimes is very difficult to do on Excel, to be honest. So Power BI has been a very good tool where we use in almost all the areas in our fixed asset reporting, inventory reporting, even IC reporting, because we even IC reporting, tracking of POs. Like so, Power BI has been very instrumental in that, and that's because you can track, you can analyze, track huge amounts of data across across a long time, across maybe 10, 12 years sometimes, huge amounts of data, and you can do it fast, and it's not, and you can pull the reports really fast. So that's one major tool that I would say has been transformative in terms of management reporting. And then in terms of the ERP in telecoms, um, we mostly I don't as I know SAP is a very good tool, but in the telecom space, most telecoms organization do not use SAP, and I guess it's because of the kind of business that we do in telecoms. So and aside from that, another thing I would say is also very useful when trying to communicate the financial data to business leaders or senior executives who might not understand the financial or accounting jargons is also PowerPoint. PowerPoint is a very good tool. Then this is very good when you are trying to communicate what you've done at the end of the day, because you've done your numbers, you pulled all your reports, you need to put it in a way that is easy to understand, and you are also not boring them with all the details, but you are just giving them concise, precise, correct information, and they're also able to make sense out of it. So those are the two things.
All right. Thanks, Tosin, for that. Really. Now, so keeping pace with trends, right? And I'll pose this question to you. So, what recent industry trends, right? Renewable energy in the oil and gas, data transformation in media have impacted the way manual accounts are prepared and used?
Okay, you said you posed that to me too, as Abby. That's what I said.
No, to Taiwo. Let Taiwo.
Okay.
Okay. Let me speak specifically on renewable energy, and we all know the genesis of renewable energy, though it's still in its early stage in Nigeria. Is a source of energy that is aligned with global action on climate change. So because of the need to abandon fossil fuel because of the impact on the atmospheric condition, and that's a major concern. As oil and gas business, we are also playing a disruptive role in ensuring that we imbibe the culture of incorporating renewable energy in our business, not entirely abandon fossil fuel, which form a large chunk of our revenue. So the industrial trend is the ESG, which is environmental, social, and governance demand by the regulators. So they said that there's a popular saying that if you don't change, change will change you. So in the industry we have, Nigeria is moving towards energy sustainability. What it means is that you must be aware of the impact of your activities to all your stakeholders. So this is a recent trend, and if you look at the part of regulators, Financial Reporting Council of Nigeria has also embrace and adopt S1, S2 as a form of reporting. So government is striving towards ensuring that we meet the global objective of ensuring that climatic pollution and emission is reduced. So in your management accounting, as it impacts management accounting, these are data points that you need to include in your management account. They call there's a report they call integrated reporting, where it captures the entire three environmental, social, economy. You need to also put that in your management accounting in such a way that it's informing the top management, it's informing all the stakeholders that this is how far we have gone in terms of imparting in terms of how our operation is impacting our environment, how we are also doing in terms of ensuring gender equality and other social factors. So this is a major trend that we need to continue. So as a management accountant, you must you must find a way to understand all these recent terms, all these trending terms, and ensure that you incorporate it in your management account, so that management can also make an informed decision around the risk and the opportunity that comes with the trend.
All right, thanks for that. Did you want to say something?
Okay. So I'm just going to be as brief as possible. So where I currently work, we are listed on New York Stock Exchange, and by extension, it means that sustainability has to be like at your forefront. So you have to you need to assure the market that you are engaging in sustainable business practices. So, and one of that is putting or trying to commit to renewable energy in whatever business you're trying to do. So I don't know if anyone has had the chance to actually look at any of the telecoms industry quarterly returns that they file at any market, be it Nigeria or the New York Stock Exchange. If you haven't, I will implore you to just have a quick read on it to see how businesses include sustainability at the forefront and how that is embedded in whatever they do. You will see some organizations whereby, yes, they might not have started, but you will see them putting that, the business has a 5-year plan. For example, business has a 5-year plan to to deploy 500 green energy sites in Nigeria. That's just an example I'm giving. And green energy sites means that site is not using any form of diesel, petrol, or anything. Mostly batteries, solar, or solar solutions, or gas solutions that are not typically the typical fuel and petrol that we run. So those are kind of the examples that you would see, and some of them you will see reports like, female leadership has increased by 30% from last year, meaning that we have, let's say, 3 more female directors, or we have 3 more female directors on our board of directors, or in our audit committee, or something like that, or even in the core management of the business, like the CFO, the CEOs, the CCOs. But we have females amongst them, or you can see stuff like, the female population in the organization has increased by 30%, or the business is and you see them put in their plan actually, even if they haven't achieved the ideal position, you see them put the plan to say, oh, the business plan in the next 3 years is to achieve 80 to 20% or 70 to 30% male to female population in the organization. So that's how you know business, that's how you know that the business is actually doing something towards sustainable business practices. So I just want to employ everyone. If you haven't, everything is available online. You can go to either the New York Stock Exchange or the Nigerian market, or just Google any organization in your head and Google and put quarterly returns in front of it. Any published reports you will see there, and all those data are included there. So just to give you an idea of what sustainable business practices look like.
All right, thanks. So in summary, right, which definitely sustainability is something that is the current trend, and it's something that we should start thinking about as we're thinking around our reporting money account and start bringing those perspectives to it. And given the fact that people are very interested in it, right? That's how we know the fact that, US are pulled out from the climate treaty in France. But yeah, it's important we start having those things in the manual account, start reporting them, because stakeholders are interested in it, because definitely climate change is a serious issue that is coming up here. But the other things that beyond just climate change that sustainability is talking about. But thanks, Tosin, for bringing that into perspective. And also Yusuf, in terms of pointing out that FRCN2 is also looking into it in terms of people reporting around it in your S1 and S2. Yeah. Okay, I think one way or the other we've answered this one. But if, for example, Tajdin, if you want to touch on this, can you share any instance where adapting to such a trend, right, like sustainability reporting, and how it has improved financial reporting or decision making for the business? Hello, Tajdin. I can't hear Tajdin. Taiwo, do you want to just touch on this briefly? Hi, Taiwo. Okay. I know that one way or the other we touched this in the last question, so I'll just move on to the next place to see if anyone has any specific question from the audience, right? So you can just inquire by raise of your hands and you can answer them. And if there are any questions on the chat box, you can definitely attend to you. Okay, so I think someone has a question around how can you integrate sustainability reporting in our management accounts? Tosin, do you want to answer that? Hi, Tosin.
Okay, hi.
Okay, good.
Yeah, can you hear me?
Yeah, so someone asked, how do we integrate sustainability reporting in our management accounts?
Okay, so there's no one way or there's no one straight answer to this. I'll say that before I answer you. And so it's a function of the industry you operate and what your KPIs are for your organization. For example, if one of your KPIs that you are tracking in your organization is your power generation, is your power generation cost. or one of your KPIs, one of the KPIs you're tracking in your business is revenue maximization. So for revenue maximization, for example, I don't know what organization or industry you're working. For telecoms, for example, revenue maximization means that you are what's it called? You are getting more customers on your site, money, you are getting more people to connect to your network. For example, in a location, you might have like 10 or 12 towers in a region. Just an
Okay. Hi, Tosin.
example. And maybe what that region of, so there's no need for it to have level. Can you hear me?
Yeah, we lost you for a bit.
Can you
Like,
still hear me?
yeah, the last we had was 12
Okay,
towers
all right.
on the sites. There's something.
Oh, okay. So let me go back. So I said, for example, you might have 12 towers, for example, in a region, and maybe what you need to perform effectively or optimally in that region is just 10. So you don't need 12. So that 12 that you have there, you are putting more stress on the environment. And if you the number of customers that are connected to that 12, you can easily relocate them into that 10 and still make more money out of it, because number one, you've cut down your cost by taking out 2 additional towers, which you are incurring cost on, and you're bringing more people onto the 10 that would make you perform optimally. So you're getting more money, and or your revenue, you're either getting more money or your revenue is static, but your cost has dropped a bit. So that is a form of sustainable business practice. So one is not impacting your bottom line, and you are still in the business of making profits and generating money from your usual business. Another thing that for the diesel that I mentioned earlier is maybe you are using diesel to power your sites. You can say that, okay, the plan in the next 2 or 3 months, I want to move from diesel to gas solution or to solar solution. It doesn't have to be everything at the point. But remember, before you do that, you'll have done your analysis to say that, okay, if for one site, if I change to gas or solar solutions, am I still going to break even? Will this site still be profitable? Will I still generate money? Most times, right? You are most likely going. You are not. You are most likely going to generate money. It might not be immediate. It might be okay. In the next 2 years, this site is going to be more profitable than it will have been if I continue to use diesel price. Remember that the diesel price will keep increasing depending on what the ICE operators have determined. But the solar solutions, the gas solutions, this is just a one-off cost that you're going to incur, and then you depreciate the assets into your below your EBITDA line, and then just a bit of maintenance that I do on a routine basis, and you still make more money from it. So that's an example of sustainable business practices, right? And in your management reports, when you're putting it in there, I don't know how you prepare your management report, but where I currently work, we have an Excel, but we also have a PowerPoint management. We have a PowerPoint. Our management report is consolidated on a PowerPoint. So let me phrase it like that. The workings, everything, the numbers, everything goes on Excel. By the end of the day, by the time we are sending it out, or we are even presenting to the market, is in form of a PowerPoint or a PDF. You're not going to see any Excel. And there you would see, these are the key performance indicators for the month, for the period. You can see EBITDA has grown this percent versus last year. Organic growth, this percent versus last year. What's it called? Green energy, this percent versus last year. So it's not a clear-cut answer. It is a function of how you are presenting your information, but you should be able to call out, so these are the things that we have done differently, and this is how it impacts the business as a whole. And like Oladele also said, it's not just about renewable energy is not just about changing from sustainability rather is not just about changing from fossil fuel to green energy or like that. There are also the non-financial part of it, which can be okay. How many females do you have in your organization? What is the gender inequality in your organization? You can also put that as part of the non-financials disclosures on your management accounts. So I have been able to answer. And if you need more insights, like I said earlier, you can check any of the quarterly returns on either the Nigerian markets or the New York markets. You would see a clear example of what the integrated report looks like. It is always in the quarterly reports that is being published.
Yeah, thanks, Tosin, for that. I think what you could help, right? If you have any link of one, you can share. We just share it on the group in the chat box, just for reference purpose, right? So someone said, what's the career path to becoming a full-time management accountant? So I'll answer this question. Now, the question right now, what we're looking at when we say management accounts, is not the management accounts that we typically talk about when we're talking about MA, right? In our kind of ACCA or classes, right? Now, the management account we are referring to, yes, is internal and all. But the career path that typically leads to people who are involved in preparation of this management account are typically, sometimes you see a lot of them coming from an audit background, right? And they take up roles around financial reporting, and they may come up as, oh, financial reporting accountants. Some of them, you see, some of them carry, maybe you call them finance manager. It can come with various titles. The major thing is the job description describing the role, right? The title can differ from organization to organization. Sometimes some people actually start from graduate trainee roles, go maybe to financial analyst. They play in the unit that is either their financial reporting unit or financial control unit, and they grow up to becoming someone handling preparation of management accounts, right? And the title could differ, right? So yeah, I hope that has answered the question in terms of the career path, right? For that, if you're referring to the person who prepares the management account. All right. So right now, I don't think we have any other question here. So I think we can move on to the, okay, this is just a reminder for those who were not here earlier or did not hear us, right? There's a link for creation of management accounts. We'll share on the chat box, just in case you're interested in learning around creation of a dynamic management account. Yeah. But yeah, we're coming towards the end of the webinar. So this one has to do with decision making across industries. One way or the other, I know we've answered these questions directly or indirectly during the course of our conversation, but we can just basically point that out clearly in this perspective. How do you tailor management accounts to meet decision-making needs of stakeholders in industries like services, customer satisfaction focus, or versus telecom, which is capital-intensive operations, right? So I'll pose this question to Tosin, and potentially Taiwo can touch base on it. Okay, let me can hear Tosin. Let me see. Okay, maybe I shall allow Tajuddin. Hi, Tajuddin. If you can hear me, you can unmute yourself. Hello, Tajuddin.
Hello, Oladile.
Yeah, okay. So basically, we're talking about how you could potentially tailor your management account to aid decision making for different stakeholders in various industries.
Okay, so I would like to speak about manufacturing companies to be specific here. You have to look at the key priorities in terms of the cost control. Example of this is the cost of production. I've mentioned it earlier, where we have direct labor, direct material, direct and general overhead. Then the aspect of inventory management, because I told you that inventory is part of the reason why a manufacturing company is operating. So also the efficiency metrics like capacity utilizations and waste reduction. So also there are some stakeholders that love to see long-term investment in fixed asset, because manufacturing business is in business to produce and sell. So at every particular point in time, you need to be looking at how your fixed assets are performing. Here, I mean major production lines. I could remember some of that I talk about supply chain optimization process that Coca-Cola Hellenic Bottling Company, which is a Nigeria bottling company, did in the past. They did a huge investment in fixed asset, and what did they do? In Southwest, we have Lagos, and we have Asejire, that is the production plant in Ibadan. Then in North Central, we have Ilorin plant. What they did was to close Ilorin plant and invest hugely in Lagos. In fact, in Ikeja now, where their production plants are situated, we have more than 13 production lines currently that are running. And the main purpose of investing so much in that is to supply all the Southwest states. Why Asejire now currently is also supplying Ilorin. But Ilorin now is a mega depot. Now Ilorin is the one supplying all these Bida, Mokwa, Makira. So this is to tell you kind of investment that some stakeholders are interested to survive. Also, we need to look at the what you position approach for the intended stakeholders. So, which are the cost breakdown structure. Look at the cost breakdown structures. You look at all other areas which can, we can make the stakeholders to make an informed decision. So I will cite a very good example. In Coca-Cola Hellenic, that was in 2016. The group which invested so much in Nigeria operation, they wanted some of the key core finance activities to be moved to Bulgaria and under a business service organization, which is part of Coca-Cola network. So what they did that time were to move all the core financial area to shared service. I know some of us might now be aware of what they call shared service. Now, if you go to Coca-Cola Hellenic Bottling Company in Nigeria now, you won't see finance operation. So financial operation is being run from Bulgaria now, and that was why I was the one that pioneered that department before coming back to Nigeria for 2 years. So what I'm saying in essence is that we have different stakeholders in the business, and we have different interests of the stakeholders, and this drive what the business does in terms of enhancing their management account, and in terms of optimizing the cost, because that is the major reason. So you have to optimize the cost. Then someone talk about the customer centric. One of the key measures that we use in shared service is what we call customer centric. We also use it in shared service, so it's not peculiar to only telecom. So I think I've done justice to your question, right, Oladele?
Yes, thanks a lot for that. I think that was quite insightful from you. So move on to the next one. What strategies do you use to ensure manual accounts are relevant and actionable for senior leadership in diverse industries? right? So I'll pose the question to Yusuf. Yusuf,
strategy to ensure management accounts are relevant and actionable. I think senior management does not have all the time to go through all your numbers. What they need is a precise, concise information that will help drive the business. So as we had rightly discussed during this webinar, we need to identify what senior management are looking for in terms of information need, then structure our management account in such a manner that will address those needs. And one of the strategies you need to use is what Tosin has spoken about. Your presentation template must be tailored towards their need. If for any reason you are to present information, you must ensure that your information is free of accounting jargon. In a layman language, how they can understand what is moving, what is driving those key objectives is what you need to discuss. Then in your own presentation, you shouldn't come up with some graph that might be difficult to understand. You need to ensure that your visualization is simple and is addressing the need of top management. With that strategy, and also you must have on your skill of presentation. No matter how good your data are or your presentation is, you must be able to speak concisely. You must be able to drive those conversations in such a manner that it points to the objective or the story that you are trying to tell. So with those in mind, you will be able to deliver message the way it is, and people, the top management will be able to get the message the way it has been communicated. I think that address part of the strategy you need to use to communicate relevant and actionable data point to senior management.
I said I would like to add to this, right? So as much as possible, right? Because of senior management, yeah, you need to summarize and make it very direct in whatever information you're passing across to them, and you're putting it in a manner they understand, right? KPIs, and you need to tell them what the problem is and the root cause and potentially options of actions they could take so that they can see that clearly. This is what you're telling them from money account. Oh, we are not doing well. Our profits with our gross margin has gone down by 3%. And why is that the case? Right? There is maybe a key customer no longer with us, or the pricing of the particular customer has not changed. Therefore, if there's an increase in cost. So clearly, you're telling them that they need to change pricing, right? Or there's an increase in cost from particular location, maybe to shut down a particular location, so that clearly they can see they are telling them something that they need to do, right? And is in a very precise and format that they understand what you're telling them and the implication of it in terms of financial terms.
Yeah, I think Dele, I agree with that. So that will come part of your own storytelling ability, where you have to point out all those critical points. So and it's part of tailoring your presentation to their needs.
So yeah, this next question, you can maybe just tell Tosin to touch base on this. Can you share tips for making money account more engaging for non-financial executive?
Okay, so for me, I would say use as little numbers as possible. I know it can be contradictory because, I mean, you're doing management account, so how can you use as little numbers as possible? So when I'm saying use as little numbers as possible, I'm not saying don't put your numbers, but for example, your profits, if you are going to be preparing your income statement, you don't have to put revenue, what's the cost of sales. You don't have to put all that details, finance cost, finance income, depreciation, amortization, FX loss, profit, tax, all those. You don't have to put all that much details. It can be abridged. Abridged. You can start as revenue, then your total cost of sales. Next thing can be gross profit or EBITDA. And after EBITDA, the next thing you can put is can lump up everything after EBITDA in one line. And next thing you have will be your profit for the period, depending on what your business is tracking. Some business they just stop at EBITDA. They don't want to see, like where I currently work, they're not bothered about what the profit is or anything because of the kind of business we do. So all they are bothered about is what is the closing EBITDA looking like, right? So is a function of one understanding what I think we said it before, understanding what the management is interested in seeing and making it as easy as possible for them. So do away with as much accounting jargons as possible, especially if you are someone that has a bit of experience in technical accounting, IFRS experts. I'm also guilty of it. We tend to put a lot of jargons in accounting jargons when we're explaining numbers or providing summary, which complicates it for senior executive because
Okay, maybe I can also add to what Oluwatosin has said.
most of them
Oladile?
people understand when you're
Okay.
hello? Can you hear me?
Yeah, I can hear you. We lost you for a bit.
Oh, okay. All right. Sorry. So make it as simple as possible. And also, if it's possible to have like a page where you have your definitions in there. For example, you can put your definition of EBITDA there. You can put your definition of ALFCF there. So they already know what you're trying to do. And if it's possible, at the end of every number, have a footnote that kind of explains what the numbers are saying. So the footnote is basically translating the numbers in words so that anyone that doesn't have finance background can have a look at it and understand at a go what you are trying to say. I sent a link to the group, to the chat, to the chat box. If you guys can open that, but that link I sent is not management reporting per se. It's what's it called, quarterly reports that is being published to investors, right? So you can adopt the same approach because the data in there is gotten from management accounts as well. But that file, the link I sent is an example of what a typical management account should look like. Not too much numbers, just straight to the point explanation. Or this quarter, we are EBITDA group by so percent. These are the major drivers for the growth. This quarter, profits reduced by so percent. These are the impacts, or this is what is driving it. So as little as detailed, but not so much accounting jargons as possible. I think that's how I'll phrase it. Then PowerPoint is key. I think that's something I forgot to mention. PowerPoint is also key. I think if you want to prepare a good management account that speaks to what's it called, that non-finance executive can relate to, it should be on PowerPoint. I think that's just it should be on PowerPoint because on PowerPoint you can use numbers, pictures, charts to describe whatever it is you're saying and the glass. So for me, I to use and less accounting jargon.
All right. Thanks, Tosin. I think Taiwo, do you want to add something? Hi, Taiwo.
Hi, Dele. I think it was Tajuddin that
Okay, Tajuddin. Okay. Hi, Tajuddin.
attempted to
You want
make
to add
some
something?
comment.
Hello.
Yeah, hi.
I believe Oluwatosin has mentioned what I wanted to mention. So what I wanted to mention is that when you do a PowerPoint presentation, By the side of it, you can put commentary that explains some of those terminology that you think will be difficult for the non-finance executive to understand. So that way, you will be able to drive your points home. For instance, a let me say, maybe you prepare certain financial positions and you have movement, or you have a line called maybe current asset. And in that current asset, we have some makeups of it, and you discover that there is a line. Let's say for maybe we have withholding tax receivables, or you have VAT receivables, because for those of us that are in oil and gas, they always deduct VAT from our transaction. So you can quickly call it out separately as a comment that, okay, bulk of this current asset is coming from, and maybe a social percentage coming from withholding tax receivable, a social percentage is coming from VAT receivable from customer, then the balance, you understand? So that way, non-financial will be able to understand what you are talking about.
All right, thanks a lot, Tajudeen. Thanks for that. So I think this is the last section, right, that we'll run through in terms of questions. And I'll pose this into Taiwo. Future proofing management accounts. What do you believe will be the most critical skills or tools for finance professionals as industries continue to evolve?
Okay. Yes. It's just one skills. Storytelling, ability to interpret your numbers and convince your audience on the usefulness of those numbers will be a major. It will be one of the critical skills that a management accountant will need to have going into the future, because as we are rightly seeing in every space, artificial intelligence is coming and is real. Majority of our processes can be managed or will be managed by artificial intelligence. So what computer will not be able to steal from us as human beings is our cognitive ability to look at things and be able to interpret it in such a manner that will suit the purpose. So it's a critical skill that we need to have. And when it comes to tools, yes, as much as artificial intelligence, ChatGPT and the likes are going to take most of the rudimental functions, the data processing part of accounting function is very key for us as an accountant to understand how to use it and how to use it effectively. What that means is that if you know how to use ChatGPT correctly, it's going to ×3 or ×4 improve your productivity, particularly in the area of Excel utilization, where it can help you to write some complex Excel formula, and in so doing, it improves how quickly you can attend to some of these questions that arises during your work. So for me, storytelling is key, and is a skill that we must have. We must be able to invest so heavily on it, so that we are better at how we communicate with all stakeholders. Thank you.
All right. Tosin, do you want to add anything to it?
I completely agree with Yusuf. I think what I'm just going to also add is and the narrative analytics is very important as well, and I think he also touched briefly on it. Right, aside from storytelling, analytics is also being able to analyze your number and use it to make, and business can be able to use the analytics for good decision making is very important, because AI is here to stay, is not going anywhere. That management account we're talking about preparing tomorrow, it just takes a matter of 5 to 6 years or 7 years before a system will come, depending on industry, and be able to prepare the management accounts that we're using complex Excel formulas to do now. So it's not AI is not going anywhere. So being able, so at the end of the day, when the AI products produces this management account, how can you use that information for good decision making? So I think that's another thing as accountants you should pay attention to as well.
Hi, Tajusim. So I don't know.
Okay.
Yeah, I'm listening.
Okay. So Yusuf and Oluwatosin has they've already said a lot about the skills, but I would like to just summarize it of that for finance professional. They need the adaptability to wherever they happen to be. They need to be able to adaptable to the environment, the technological expertise. We've talked about AI technology, enterprise resource planning system. We've talked about the analytical tools like Power BI, Power Query, and we have also some of these report writers. I mean, also, in fact, currently some of the accountants or professionals are learning SQL also to pull data from the ERP system in the required format. Also, a strategic mindset will also be indispensable in navigating evolving industry. So they must have a right strategic mindset to deal with the situation. And that is what I can add to what they've said.
All right. Thank you very much. Thanks, Tajin, for that. Yeah. Yeah. Okay. Yeah. All right. So I think we've come to the end of the webinar. And I think it has been quite insightful having Taiwo, Tosin, and Tajuni on the call, right? And we do appreciate your time for sharing your knowledge, your wealth of experience during the course of this webinar. But if you have one word for the audience in terms of what your go-to would be for based on the webinar, what would that one word be? Tajudi?
Yeah, first of all, I would like to thank Accounting Yard for organizing this kind of seminar. For me, it's a seminar that even if a participant pay more than 200,000, it worth it because of the takeaway. You can see people bringing different industrial experience for manufacturing, cutting across media, oil and gas, and also telecom. So it's a very good one. And I want all the participants to make sure that they make use of all the advice we've given on this platform. And we also want to Accounting Yard to do more of this webinar. I'm not too sure it's going to be free anyway. To synthesize our, upcoming or the professionals in the industry so that they can sharpen their skills, so that we are going to also be happy that when we need people to work with our company, we are able to get people that are highly skilled. And of course, we have different platforms that people can learn this day. On YouTube, you can learn a lot, different applications. In fact, you can learn Excel on YouTube videos and all that. So I want to appreciate Accounting Yard for bringing this program to the professionals. And I want to also thank them for giving me the opportunity to also showcase my experience, and for also the participants to gain from the wealth of experience that I've gathered over time. Thank you.
All right. Thanks, Josh. Tosin?
Okay, so in addition to what Tajudeen has said, I think my one, okay, not one word, maybe two words that I would say would be keep learning. Like learning is a continuous process and it never stops. Be open to learn new things because you don't know when you might need it. That's just the honest truth. So, and you don't know when that opportunity to use that knowledge would come. So keep learning. So that's just for me.
All right, thanks a lot, Tosin. And Taiwo?
Yeah, I think I agreed with Tajudeen and Tosin. My B2B to enjoying everybody on the call to continue improving, keep grabbing the new thing that you don't know, keep learning, unlearning, and keep your desire, keeping it them dry so that you can continue to tap getting necessary knowledge. As Tosin has said, it is important that you stay in touch with top trend and ensure that you are when you are called upon, you are up to the task. And one of the platform where you can get a qualitative practical experience. I need to emphasize this. There's difference between theoretical knowledge and practical experience. Accounting Yard will provide that for you. I've been following them for a while. I know these guys personally, so they are top notch and they will deliver value. So please don't wait any moment anymore. Just join one of their courses and you will never regret spending so little to get so much. Thank you.
All right. Thanks a lot. Thanks a lot for everyone. Thanks, Taiwo. Thanks, Tosin. And thanks, Tajudeen. So just for those who are new with us, right? So the idea for us to do webinars like this for free every month, where we basically just share insights into topics that we feel that people could generally get information on, just help improve the knowledge of accounting, basically bridging the gap between theoretical and practical accounting. Thanks for taking out time. I know we are off our time by almost 20 minutes plus. But we do appreciate the fact that you are patient with us to see us through to the end. Do enjoy the rest of your day. For those that were not online fully, the video will be uploaded to YouTube. So you can always rewatch at your own spare time, taking your time to watch. Thanks everyone on the call, and do enjoy the rest of your day and have